Dear students, before starting the topic, I would like to tell you the tax on total income is collected basically in four ways: deduction of tax at source, advance tax, self assessment tax, tax on assessment through demand notice, that is, direct payment of tax. And in this lecture, we will discuss about advance payment of tax or pay as you earn. It means tax shall be payable in advance during any financial year in accordance with provisions of the section 2208 to 219 in respect of total income of the assessee, which would be chargeable to tax for assessment year immediately following the financial year. In some simple terms, as per the general rule, we say the income tax of previous year 2018-19 shall be accessible to tax in assessment year 1920. But advance payment of tax says an assessee is liable to pay tax on estimated total income of previous year of 2018-19 during that previous year 2018-19 itself in periodical installments. So when the liability to pay advance tax arises, so where the amount of such tax payable by the assessee during that year as computed in accordance with the provisions of this act is rupees 10,000 or more, and applicability of this scheme is to all the assessees. All the assessees may be individual, HUF, firm, AOP, body of individuals or company, etc. Then non-applicability of advance tax for resident senior citizen, that is, who is of the age of 60 years or more at any time during the previous year and not having any income chargeable under the head profits and gains of business or profession. So advance tax will not be applied to them. So how to compute advance tax? First is calculation of advance tax payable by an assessee under section 210, 1, 2 or 5, 6. Basically, what is it? You are to calculate estimation of income under all the 5 heads. Then you will apply the provisions relating to clubbing of income, set off of past losses. Then you will calculate gross total income and then claim deductions under section 80C to 80U. Then you will find out after deduction from GTA you will minus deductions. Then you will calculate estimated tax on total income including surcharge if it is applicable. Then you can claim deduction of estimated tax deducted or collected at source also, at service also. So finally you will find out the estimated net tax. So if this net tax, as I have already told you, is calculated 10,000 or more, assessee is liable to pay advance tax. Then second point is calculation of advance tax payable under section 210(3). So assessing officer, while making an order under this section asking an assessee to pay advance tax, shall take into consideration first total income of the latest previous year on which regular assessment has been made, or total income returned by assessee in his latest return, whichever is higher, and assessee will take it as current income and on which tax shall be calculated at the rates applicable in the financial year. Then next is calculation of advance tax payable under section 210(4). So this is regarding amended order. In case assessing officer is making an amended order, the total income declared in the return furnished by the assessee for the later previous year, or as the case may be, total income in respect of which a regular assessment has been made shall be deemed as current income on which tax will be calculated at the rates in force in the financial year. So assessee having agriculture income, so for calculation of advance tax, agriculture income shall be integrated with current income if the Finance Act of such financial year so provides. Now payment of advance tax. First, voluntary payment of advance tax. It's a duty of every assessee whether or not assessed previously to tax, to deposit the amount of advance tax on or before each of the due dates. Then increase or decrease in advance tax, assessee is authorized to increase or decrease the amount of each installment of advance tax in accordance with his estimate of current income. Then power of assessing officer. If assessing officer is of the opinion that an assessee has already been assessed by way of regular assessment in respect of his income and has not deposited the advance tax during the financial year, so he may order such assessee in writing at any time during the relevant previous year, but not later than 1st February to deposit the advance tax calculated. Then amendment of order issued in previous point 210 subsection 3. In case assessing officer finds that assessee has filed the return or a regular assessment has been made for previous year later than that referred in point 3rd above, he may make an amended order. He may ask assessee to deposit the amount of advance tax calculated on the basis of total income returned in such return or assessment on regular basis. Assessee to intimate for reduction or increase in advance tax. Let's suppose assessee is served a notice under this section asking him to deposit the money of advance tax, and in his estimation the advance tax payable on the current income would be less than, he is of opinion that it is less than the amount to be required to be deposited. So he may intimate the assessing officer to that effect and deposit the percentage of advance tax based on his own estimates, and same rule will be applicable if he is of the opinion that it is more. So same rule will be applicable. Now installment of advance tax and due dates for all assessees. All assessees means corporate assessees as well as non-corporate assessees other than the assessee referred to in clause B, which we will discuss in the next slide. So what is the due date of installment? You can see we have 4 installments: on or before 15 June, 15 September, December, and on or before 15th March. Amount payable of advance taxes not less than, first case में 15 June में not less than 15% of such advance tax. For example, let's suppose the estimated tax liability for the previous year is 5 lakh. So advance tax, first installment will be 5 lakh, 15% of 5 lakh, that is 75,000, which the assessee will have to deposit before 15 June. And if we 15 September, if we calculate again 5 lakh, now we have to calculate 40%. 40% of 5 lakh is 2,25,000 minus if he has already paid 75,000 in first installment, so resultant figure 1,50,000 he will have to pay. Similarly, if we go for December, 75% of 5 lakh, that become 3,75,000 minus if we have already paid in first installment 75,000 and in second installment 1,50,000. So we'll go on like this. Now assessee covered under section 44 AD. Now what is it? Actually 44 AD is presumptive taxation scheme. So there are certain clauses. The assessees who have chosen this tax, for example, one clause is that gross receipts should not be more than 2 crore. There are many clauses. So if they have chosen for this tax, this section 44 AD, they will have to pay advance tax of the whole amount in one single installment on or before the 15th March of the financial year. Next is interest on deferment of advance tax. So first point is for all assessees except the assessees which have been covered under section 44 AD. So first is for deferment of an installment. Deferment means shortfall of an installment. Installment is less. So as we have earlier read that first installment is June 15. If let's suppose advance tax is paid less than 12%, so rate of interest will be charged simple interest at the rate of 1% per month for 3 months, and amount on which interest is to be calculated, it will be the difference between 15% of the advance tax due on returned income and tax so deposited. Similarly for Next, so main penalty is 1% of simple interest for 3 months. So similarly for next, third and fourth clause will be there. Then for assessees covered under section 44 AD, if an eligible assessee in respect of eligible business referred to in section 44 AD, who is liable to pay advance tax under this section, failed to pay such tax or advance tax paid by the assessee on its current income on or before the 15th day of March, or if it is less than the tax due on the returned income, then assessee shall be liable to pay simple interest at the rate of 1% on the amount of the shortfall from the tax due on the returned income.